Hi, this is Jamie French with Advent Partners, and it's been a few weeks since we've done a market update, so I'm going to try to catch you up to speed today. Let's start with some of the positive news that we've seen. In the month of May, U.S. industrial production rose by almost 1%, which surpassed expectations. In addition to that, U.S. service sector income in June reached its highest level in almost 2 years. So some good economic activity going on in both the production side as well as the service side of things. Inflation continues to drop, but slowly. And the stock market is doing really well. The S&P 500 is up almost a little over 15% year to date. And international markets are also doing well. Emerging markets in particular are up almost 7.5% year to date. And you might look at this as a positive or negative thing, but in the month of June, consumer sentiment dropped to a 7-month low. So that would seem to be a negative thing, but when it comes to the markets, consumer sentiment often moves in an inverse relationship with the market, so you could look at that as good or bad news. On the flip side, there are some things, some headwinds, because inflation has continued to drop slowly. At the last meeting in June, the Fed chose to keep interest rates the same, which was largely expected, and also communicated that they anticipate making one rate cut by the end of calendar year 2024, and up to 4 rate cuts in 2025. So we'll see. But that's what's going on in the interest rate world and inflation world. And the Fed wants to see continued pattern of reducing inflation. The bond market, as a result of that, continues to struggle. It's negative year to date and really hasn't recovered since the aggressive interest rate hikes that occurred and the negative bond market in 2022. So the bond market continues to languish, and we wait on the Fed and interest rates for that to recover. The PE ratio on the S&P 500, the price to earnings, remains high. So the market is somewhat rich right now, and we're going to need to see sustained strong corporate earnings to support the share prices that we're seeing today. And of course, we have an election year, and as we get closer to that date, we expect there to be additional volatility. So that's our market update for this week. As always, if you need help understanding what's going on in the markets or making adjustments to your portfolio, we're here for you. Thanks, and have a great week.